Crypto is a unique market in the way that we've got data that's not available in many other markets. That data is available to every market participant, but most people don't look at it. I do believe though that we can get a market edge by figuring out what's actually driving prices. It's really not that complicated. Money drives prices, and as there are inflows into the ecosystem, prices tend to go up. What we see here is the stablecoin market cap over time. The reason why I like this chart so much is because it has very little volatility, as in it either goes straight up or it goes straight down. We can clearly see where we are in the cycle. Now, when money flows into the system, crypto prices tend to appreciate. When money is flowing out of the system, so people are withdrawing their stablecoins for fiat dollars, that's when prices tend to go down. Since October of 2023, the stablecoin market cap has 2.5x'd, while the Bitcoin price has more than 4x'd. At the same time, the transfer volume of stablecoins is going up, and interestingly enough, there's more and more dominance of USDC. That's a big shift. In the past, Tether was mainly used for transactions on the blockchain. Now it seems like there are more long-term holders in the ecosystem. And so tokens that have very clear, transparent backing are more preferred than the tokens that might have slightly more liquidity. Now, money continues to flow into the system, but what kind of money? As in, is it mainly the small retail investors that are now buying up? Is it mainly the big whales that are buying up? Who's actually dominating the stablecoin market? Here's now the stablecoin wealth distribution. The dark purple area is all the wallets that have at least $10 million worth of stablecoin. Light purple is 1 to 10 million, and the shades of red, green, and turquoise is everything below $1 million. We can also normalize this to 100%, and here we can see what's really driving crypto prices short term. It's really the whales. So more than half of the stablecoin market cap is in wallets that hold at least 10 million US dollars. If we add the millionaires, we've got a 70% market share. So if you don't have $1 million in the crypto space, you actually don't have that much impact on price discovery. Interestingly enough, even though it seems like a few big players are making all of the price discovery, we still see some cyclicality in the data. As in, there are some months, potentially the summer months, where we have less price appreciation, and the winter months, when everybody is at home, when everybody has more time, that's where we tend to see crypto appreciating. How strong is that effect? It's shown over here. At the bottom, we've got a table representation. At the top, we've got a chart representation. And there's one thing that stands out. October tends to be positive. Things are oscillating quite a bit all over the place, but October seems to be the clearest winner. We can also average this out and just look at the recent past. So let's say since 2023, October is bullish, but so is November and December. And the summer months tend to not be as bullish. You can also have a look at everything after 2020, so a bit more history. Again, the same kind of development. Q4 tends to be very bullish. Q3 tends to be not as bullish. It is unclear though how stable this pattern will be in the future, because Bitcoin is maturing, or the crypto market as a whole is maturing. Volatility is coming down, and the market participants do become more and more professional over time. And so just because people are on summer break doesn't necessarily mean anymore in the future that prices don't move much. Just because people come back from the break doesn't mean that suddenly we see all the investments in the future. But we might end up with a self-fulfilling prophecy. And if everybody expects October to be bullish, maybe that's exactly what happens, because an expectation can turn into reality if just enough people act on that expectation and end up buying. Have a look at the Bitcoin daily price performance. This tended to hover at around 5.2% and now went down to 2.9%. So this is over the span of 8 years. Volatility is coming down. Here is the weekly price performance that was at 16.8% and now went down to 7.8%. So volatility is declining. Prices don't move up and down as much anymore. But it's mainly they don't go up that quickly anymore. They still go down quite a bit, because that's what's shown over here. This is the maximum drawdown from the all-time high to the bear market bottom. In a bear market, the price can still go down massively. We are of course very far away from a bear market, but just goes to show how risky Bitcoin can potentially be. There is a decline in the magnitude of those bear markets, right? We can connect those bottoms, but still, if at some point things turn really bearish again, a 70% drawdown would very much be in line with the historical movements. Even for the current bull run, we tend to be rather muted in volatility, as in the corrections throughout the bull run are now rather small. They tend to just have a maximum magnitude of around 30%. We did see more than 50% drawdowns in prior bull markets. 40% drawdowns were definitely possible as well. But of course, it feels somewhat off to now talk about 30, 40, or maybe even 70% drawdowns, because overall the market is still expanding, right? We have looked at the stablecoin market cap before. The turnaround here, by the way, happened when Terra Luna, or the Anchor protocol, collapsed. That was when UST depegged, when a lot of people took their money out of the crypto ecosystem. During that contraction, FTX and Three Arrows Capital also went bust. But the start of that contraction was actually a decentralized finance protocol, Terra Luna. As long as money flows into the space, as long as people deposit their fiat currency to a centralized exchange that then sends it over to a stablecoin custodian that then mints tokens on the chain, we're likely going to continue to see rising crypto prices, right? Money is getting into the ecosystem. On top of that, we've also got the demand through the ETFs and the Bitcoin treasury companies. Those entities tend to just accumulate long term, reducing the circulating supply of Bitcoin and thus also pushing up crypto prices as a whole, right? There is a lot of correlation between Bitcoin and other cryptocurrencies. When Bitcoin appreciates, this does have a positive impact on altcoins as well. Now, since we see those constant purchases now, and since the volatility is also rather coming down, prices don't go up and down as erratic anymore. Since that's a current situation, maybe it makes sense to completely throw out the idea of a 4-year cycle. So the idea that we have 3 bullish years with subsequently 1 bearish year. The idea stems, of course, from the fact that the additional supply that gets issued for Bitcoin gets cut in half every 4 years. So that's called the halving. And what we see over here is the Bitcoin price return since its halvings. The very first cycle saw most performance. The subsequent cycle saw less, subsequently again less. And so this is an indication of long-term diminishing returns. We get less and less return as the Bitcoin market cap rises and it takes more money to push up prices further. This is our current cycle, and as expected, we perform worse compared to prior cycles, but we don't always have to stay below the prior cycles, as in there is a chance that at least short term we go above the blue line. We're probably not going to end up at a 6x since halving. We are currently at 1.8x, but there's still some more upside. But just have a look at this. This is the Bitcoin price performance since cycle low. And it seems like the rallies don't necessarily top out at similar points in time. We topped out already after 300 days for the first cycle. We topped out after 700 days in the second cycle. And in the third and fourth cycle, we topped out at very similar points in time. And this would indicate that maybe it already makes sense to take some profit, right? Maybe we're topping out again around 1050 days after the cycle low. The structure really isn't that obvious anymore using cycles. This here is now the performance since the cycle high. So we start off with the bear market and then get into recovery. Again, we've got our diminishing returns. And again, we might only have a few more months left of positive price performance, which by the way would be in line with our seasonality idea that positive performance happens in Q4 and then potentially slows down in Q1 of the following year. Maybe we just continue to creep up slowly. This is the quarterly rolling return on investment on Bitcoin. And again, this is coming down over time. Price appreciations take longer. And of course, at some point, this line will get broken. But as long as money is flowing into the space, as long as the stablecoin market cap is going up, I keep on holding most of my risk on assets. Now, here's something I want you to avoid. Please do not follow people that tell you that there's the next 100x cryptocurrency where you're getting rich quick. Because you might have read about the statistic that 99.6% of pump.fun traders, so traders of smaller meme coins, did not realize a profit over just $10,000. The vast majority of people lose. The winners might be among those influencers, the winners might be among the insiders, and the rest is simply burning their money. And so because of that capital concentration process, because more and more people lose their money, ecosystems like pump.fun tend to shrink when there's no new marketing. And so what's the solution here? Because we want to make money over time, right? What's actually realistic if we can't make our 100x? There is a simple conservative solution. It's just dollar cost averaging. It's buying $1,000, for example, every month into something like Bitcoin. So do this for longer than a cycle, so for more than 4 years, in this example 6 years, then the performance looks like this. So had you dollar cost average into the S&P 500 or into gold, you have gotten this performance, but by buying into Bitcoin, you're getting this performance here. Now the time horizon matters here, right? Because there are bear markets. We include here a bear market where Bitcoin went from almost 70K all the way down to 16K. So at that point, the performance of the S&P 500 and gold and Bitcoin were very similar. But if the time horizon is long enough, then just within 6 years and just $1,000 per month, a comfortable nest egg of 360K can be built. It's not sexy, it takes longer, it takes effort, it takes contributions. It's not getting rich quick, but it's getting rich consistently. Now, I'm a fan of beating this, of course, because the crypto market is still very inefficient. But it's not inefficient in the way how you might expect. I am dollar cost averaging into my trading portfolio as well. This is my active trading portfolio measured in BTC. And my plan is to get to 8 Bitcoin within the next 2 years. Now, I didn't just buy Bitcoin with my trading portfolio. I actually did do active trading that did outperform buying and holding. I got this alpha here. So had I not dollar cost averaged, if I just paid into the trading portfolio once, I would have roughly doubled the amount within 48 years. So because I didn't just buy into Bitcoin, but I did do active trading, I'm now close to 5 Bitcoin and not just close to 2.5 Bitcoin. So what's more important? Is it the trading? Is it the regular contribution? The answer is both is important. At the beginning, the regular contribution is more important. At the end, generating the alpha is becoming more important, right? Because once this is at 3x, not just at 2x, then 2/3 of the Bitcoin in the portfolio is just due to alpha and is not due to dollar cost averaging. So both is important. Contributing is more important at the beginning. Trying to outtrade everything when the capital base is still small is not the smartest idea. Again, you've got a very high likelihood of losing it all. And so I'm actually doing the exact opposite of what most other people are doing. Most others try to find the next best altcoins. They have maybe a diversified altcoin portfolio, 10, 20 altcoins, and they try to beat Bitcoin that way. But more often than not, this fails. If you listen to people like this, how ApeCoin will be the next 100x investment, this video was published 8 months ago, then you would have underperformed Bitcoin by 44% since then. Now, this is not just in the last 8 months. Have a look at what ApeCoin did prior to that. It just underperformed Bitcoin extremely consistently. And so that's how everybody gets wrecked. That's how the majority of people lose. Most people buy things that get recommended by influencers, and very often those influencers get paid by the different crypto projects to do that marketing. I, by the way, never take any money from any crypto project ever. The only money that I take is from the premium members that support this channel here. But more of that in a second. Here's the reason why ApeCoin did so poorly. The supply increased over time massively, and the early insiders and the team, etc., they get token unlocks over time and they dump those unlocks on the market, which makes sense when your token performs like this relative to Bitcoin. So this as well is a self-fulfilling prophecy. If most people expect a token to do worse than BTC, then the selling pressure will just continue. And so my approach is to just flip this whole thing around. So instead of trying to find the best altcoins and buying them and having a diversified portfolio of altcoins, I'm just betting on falling prices of altcoins relative to Bitcoin. So I go long Bitcoin, I bet on rising prices of Bitcoin, and I go short the altcoins that are extremely poor in long-term performance. So instead of this chart, I've got the performance of this chart here. So there's now Bitcoin relative to ApeCoin. And what we see here in white, that's just the Bitcoin price. As in, Bitcoin does have its drops, but relatively speaking, since ApeCoin is so inflationary, it tends to do so much worse. And so over time, it tends to just very constantly outperform just plain old holding Bitcoin. So there's a better strategy to just buying and holding Bitcoin. There's a better strategy to just dollar cost averaging into Bitcoin. And it's not finding the next 100x altcoin. It's betting on falling altcoins because the insiders are cashing out constantly. That's actually how we can beat the market. And that's what I'm doing for the last 4 years. And so I want to share this strategy, of course. It's not as straightforward as just buying an altcoin. We do need to use decentralized finance applications. We do need to do some risk management here, but long term, again, it's worth it. I have made many tutorial videos on the topic, but in the end, you only need 2 videos, 2 very important videos just to copy trade what I do. So that's this video over here, using perpetual futures to bet on relative valuations, and this video over here, risk management with relative valuation bets. Those 2 videos in total amount to roughly 1 hour of content. After you've consumed this content, you can do bets like this. Now, many altcoins are inflationary, and so there's many such opportunities. I also have one favorite trade where the outperformance is very, very constant, where the volatility is very low. I will share that favorite trade once you join. So after you've watched those 2 videos and you've joined the community, I will share my favorite trade. And if that favorite trade does not make money after 1 month of holding, then I will refund the premium membership fee for you, no questions asked. So it's currently $125 per month, and if you don't make money with that trade in that month, you will just get that money back. So you're not really risking that money, and you can watch all the tutorials in premium, not just the 2 that were mentioned here. So feel free to explore premium without any risk. A link to the website should appear directly here on the screen. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.